All right, so you wanted to know more about Reliance Industries' latest financial report, their second quarter results for FY25? Well, let me tell you, this thing reads like a financial thriller.
It really does. Lots to unpack here.
It's a big one, right? I
Yeah.
mean, we're talking about a company with its hands in everything.
hmm
Oil, gas, retail, digital services, you name it.
Yeah, a real conglomerate. And that's what makes this report so fascinating, trying to see how all these different parts are performing.
So give us the big picture, the headline news. How did Reliance do this quarter?
Well, the headline is they're resilient, remarkably resilient,
Resilient, meaning,
meaning that even with some pretty significant challenges, particularly in their oil and chemical business, they still managed to deliver solid earnings overall.
so it's like one of those, like a seesaw. One side dips, but the other side lifts.
That's a great way to put it. Their digital and upstream segments performed exceptionally well, which helped offset some of the weakness elsewhere.
Okay, so we've got a bit of a good news, bad news situation here, but before we jump into the specifics, it's probably worth reminding everyone, this is Reliance Industries. We're talking about a giant in the Indian economy, right?
Absolutely, a behemoth. And their performance has a ripple effect throughout various sectors. So understanding how they're doing is about more than just their bottom line. It's a window into the Indian economy as a whole.
Okay, so with that in mind, let's start digging into the details. Where do you want to start? Which sector is calling your name?
Well, we've got to start with the star of the show, right? And that's their digital services segment, Geo.
Geo, right? The digital powerhouse. Everyone wants to know how they're doing. What's the story?
Well, get this, their revenue and profits through the roof this quarter. It's actually pretty remarkable.
So what's fueling this growth spurt? Did they discover a digital oil well somewhere?
Huh, that's a good one. Well, it's a combination of things. For one, they implemented that tariff hike we talked about.
Right, right.
So that obviously gave their revenue a nice bump. But they've also been really aggressive with their 5G rollout, and they launched that new Geo Air Fiber service. Remember, we touched on that?
Yeah, the whole fixed wireless broadband thing, right?
Exactly, and it's taking off like a rocket. They're connecting something like 1 million homes a month with Geo Air Fiber.
1 million homes a month.
Yeesh.
Seriously.
Yeah, it's mind-blowing. It makes them one of the fastest growing, if not the fastest growing, fixed wireless operators globally.
I mean, that's like connecting an entire city to high-speed internet every month. And they're giving away all that free storage too, right? Like 100 gigabit or something?
Yep, 100 gigabyte of free storage with Geo AI Cloud. It's a very strategic move, They're trying to create this whole
A
ecosystem.
digital ecosystem, right? Like lock everyone in.
Yeah, exactly. They want to be the go-to platform for everything digital in India, and they're playing the long game, undercutting the competition, and offering these really attractive packages to gain market share.
Makes sense. So Geo's killing it. What about oil and gas? That's always a bit of a roller coaster, isn't it?
You're telling me. This quarter was no exception. But here's the thing, even though gas prices dipped globally, their oil and gas segment still saw profits climb.
Wait, hold on. Lower gas prices, but higher profits. How does that work?
Well, they ramped up production, specifically from their KG D6 block.
So they're pumping more gas to offset the lower prices. Smart move.
Exactly. They're making up for the lower price per unit by selling more units. Of course, they're keeping a very close eye on the global energy markets, which, as we all know, are about as stable as a...
As a house of cards in a hurricane.
Yeah, pretty much. Geopolitical tensions, supply chain disruptions, you name it. But for now, their strategy seems to be working. Okay, now let's talk retail, because this is where things get really interesting, I think, from a strategy perspective.
Retail, huh? Okay, what's the scoop? Are they opening a store on Mars? What's going on?
Not quite Mars, but yeah, there are some interesting developments. Their revenue in retail actually dipped a bit this quarter.
Really?
Yeah, and it seems like a lot of it comes down to weak demand in their fashion and lifestyle categories.
Ah,
But here's the thing. Reliance isn't panicking, they're not slashing prices or anything like that. Instead, they're focusing on streamlining their operations and really leaning into their digital platforms.
so it's less about having a huge physical presence and more about online sales and delivery.
Exactly. It's about adapting to how people shop. They're also experimenting with new store formats. Have you heard about their Yusta concept?
Used to. No, tell me more.
Well, it's basically a new store format aimed specifically at younger, more digitally savvy shoppers. They're trying to stay ahead of the curve, anticipate changing consumer preferences.
Okay, so we've talked about the high points, we've talked about the areas where they're adapting, but what about the, let's just say the part that needs a little love, the O2C segment? That didn't have the best quarter, right?
Yeah, needs a little love. Might be putting it mildly. Sounds like their O2C segment took a bit of a beating this quarter. Yeah, it wasn't pretty. Profits in that segment took a nosedive, and a lot of it comes down to that shrinking fuel crack spread.
The what now?
The fuel crack spread. It's basically the difference between what they pay for crude oil and what they can sell refined products for. Like the difference between the price of crude and the price of, say, gasoline. And that spread has been narrowing, which puts a real squeeze on profits. On top of that, you've got weakening demand, so it's kind of a double whammy.
Oof, yeah, that's rough. But even with the O2C struggles, Reliance is still like a powerhouse, right?
Yeah,
They're not hurting for cash or anything.
exactly. That's what's so impressive about them. Even with this big challenge in their O2C business, they've got this incredible financial strength. Their balance sheet is rock solid, and they generate a ton of cash flow.
So they've got deep pockets.
Yeah.
But what are they doing with all that financial firepower? I mean, are they just sitting on it?
Definitely not. And that's where it gets really interesting. This is where you see their long-term strategy at play. They're taking that financial strength and investing heavily in future growth opportunities.
Like what we were talking about with their 5G and Geo Airfire.
Exactly. They're playing the long game, making these big strategic bets while others are just focused on the short term. It's like they're playing chess while everyone else is playing checkers.
It's a bold strategy, that's for sure.
Yeah.
But it seems to be working for them. They've got that go big or go home mentality,
Mm-hmm.
but they've also got this massive safety net because their business is so diversified.
Precisely. And they're financially disciplined, so they're not just throwing money around recklessly. Okay, so looking ahead, what's next for Reliance? Well, they're expecting a big boost in consumer demand during the festive season, which should help their retail and digital segments. And they're watching the global economic recovery very closely, especially in China, because that could have a big impact on their O2C business.
So a cautious but optimistic outlook.
I'd say so, but beyond the quarterly results and the market trends, I think Reliance's story raises a bigger question.
Oh, like what?
Well, like, is this the future of business? This whole hybrid model, a tech-focused conglomerate with their fingers in so many different pies. Can a company really be successful doing so many different things while also, like, pushing the boundaries of innovation?
That's a really interesting question. I honestly don't know the answer. It's definitely something to think about.
It is. It's not just about Reliance, it's about the future of business in general.
Well, on that note, we've reached the end of our deep dive into Reliance Industries. Hopefully you've learned a thing or two about their financial performance, their diverse businesses, and even their vision for the future.
Absolutely. And remember, the journey of understanding and learning never really ends. So keep asking questions, keep exploring, keep diving deep into the topics that fascinate you. Until next time.